All right, welcome back to the channel, everybody. Let's go ahead and talk about Bitcoin. We didn't discuss Bitcoin last week because there wasn't a whole lot to discuss. I mean, we were looking for Bitcoin to break out. It broke out, and now it's just basically, doing its thing. So let's go ahead and discuss what our future outlooks are, what some people in the media are saying, and what we could potentially look for in this week to come. So first and foremost, right now, you can see here we did break down this morning. Today is Saturday. Below the daily resistance level here. This would have been an area where short sellers were looking to get short. I don't advise anybody look for short scalps while Bitcoin is super uber bullish like this. The simple reason is you typically want to look for scalps in the direction of the overall trend, as this can help you get into better positions. For instance, you might be able to nail a swing low, get long at a specific support area, and you might be able to sit in that long for a couple days instead of just one intraday scalp. So I always suggest that you look for long scalps, especially when something is breaking out to all-time highs, but that's neither here nor there. If you want to take the short side, you can, but I mean, you can clearly see the short side has been getting wrecked for quite some time here. The last 4 days, Bitcoin's been kind of trading sideways. But I mean, yesterday we had a 1.3% down day on the S&P 500. Mr. Powell did come out and speak, so that did cause a little bit of volatility inside the S&P. But Bitcoin had a nice bullish day, closing above daily resistance here. And now here we are today with this very tiny inside day range. So we will see if that daily resistance is able to hold as support moving forward. But we are expecting Bitcoin to continue to rip. As of right now, Bitcoin is currently up on the year. We can go ahead and get a measurement of this and say Bitcoin is up 115% on a year-to-date basis. That's a pretty nice move for 2024. We did hit the measured move out of this breakout. We're really close to hitting a measured move, and that's not perfect, but basically around $90,000 would have been a measured move from this breakout. Now here's the thing, there is really no overhead resistance as far as past price is. Now people will be trying to put on trend lines and all kinds of other things to delineate a specific resistance point. And I think that the easier trade is to just look to buy swing lows. You can wait to buy multiple red days, or you can look to buy the low of a weekly red candle. You're going to get many opportunities. Bitcoin is not just going to go up and never pull back. There will be massive swings. The more that retail starts to get involved with this, the more you start to see that FOMO mentality start to happen. You could see 20-30% swings, like massive swings. And those kind of swings are going to basically take most of the leverage or leveraged positions off the table. So just be careful. If you're holding Bitcoin, I think you're doing the right thing, because as we'll see here, we are starting to see some people make some predictions. Let's go ahead and pull some of those predictions up. So first and foremost, let's go ahead and lead with what Powell said. We are moving policy over time to a more neutral setting, but the path for getting there is not preset. The economy is not sending any signals that we need to be in a hurry to lower rates. I would say the 10-year disagrees with that, but anyways, the strength we are currently seeing in the economy gives us the ability to approach our decisions carefully. That just basically means he's not going to rush to any rational judgments. He's not going to start doing 75-point cuts or anything like that. So it'll probably be slow cuts until something in the economy triggers they need to do it more rapidly. Also, we have Cathie Wood coming out saying that she is predicting Bitcoin will reach $1.5 million by 2030. Seeing how we're getting ready to start the year 2025, that's literally 5 years and 1 month away. I mean, there isn't any other asset class that you could get into right now that is trading at $90,000 with the potential to go up to 1.5 in 5 years. No other asset class will achieve those kind of gains in the same amount of time. Now, obviously, I think her target is way overblown, and Cathie Wood has gotten a lot of stuff wrong in her career. So moving forward, let's go and discuss this. This shows long and short-term hodlers. Generally, when we see Bitcoin breaking out to all-time high prices, this blue line you see will start to dump. That's essentially your here Bitcoin goes up, breaks out all-time high back when the all-time high was $19,000. That's when your longer term hodlers started to shed and take profits. So, that's a normal thing. We're just starting to see a little dip on that. So the higher Bitcoin goes, the more this blue line will dip, which is par for the course, if you will. That's generally what we will be seeing, or we have seen in the past. But as of right now, with the amount of long-term hodlers that have started to take profits, there are still a lot more left on the table. They're just now starting to take profits because Bitcoin just now really started to break out. And if Bitcoin gets going like we know Bitcoin can, then you're going to see massive, massive moves in the price as we move higher and longer into this period of bullishness. So here we are on the weekly. I mean, that's a fantastic looking week. We did set what looked to be an island top reversal here, and people that's been following me for a long time knows that when you see stuff like this, it doesn't always clarify a top. Obviously, I would want to see a big red candle with that in order to signal a potential top. We didn't get that. This was just pulled in so many short sellers looking for that island top reversal, and then price just broke right on through them the very next week. And then this week, you're seeing that bullish continuation. So once you get, 2, 3, 4, 5 weeks in a row of straight bullishness like this monthly candle alone is almost $27,000. If you go from low to high, the low of this candle is $66,783. The high of this candle is $93,495. Big, huge move there on one monthly candle. That's fantastic stuff. We still got 14 days left on this candle, so we could see a pullback to the midpoint, back down to the $81,000 region, maybe, but at that period or at that point, I would be looking to buy in myself or look to scout long day trades. Either way, I think you're going to be looking to do the right thing until we see or hear the Fed start to, change things around because of whether the economy is going to go into recession or any of that. Then we will start to change our tune. But until that happens, there's no reason for us to be looking for bearish trades right now. And finally, the one that I like the best is Van Eck. If you don't know, they hold a lot of ETFs. The Van Eck executive predicts institutional tsunami may drive Bitcoin to $180,000 within a year. That's essentially saying by November 2025, Bitcoin could be double the price that it is right now. I don't know about you, but I'm more than willing to sit inside of Bitcoin and let my bags double in size up to around 180K. Now, with this being said, Van Eck has a lot of customers, and they're probably getting a lot of good feedback from their customer. Their clientele is probably suggesting that they want to, put more size into a Bitcoin ETF, so to speak. And that's just going to drive more bullish inflows into Bitcoin. As you know, whenever people buy Bitcoin ETFs, the person that is in control of that ETF has to then go and buy Bitcoin to manage that position. And that is what he's expressively talking about right here, that if it's not only their institution as far as Van Eck, but BlackRock and any other institution that has a Bitcoin ETF, you could see an institutional tsunami whereby if retail really starts to jump onto this bandwagon and starts to buy up a lot of those Bitcoin ETFs, that is going to make the institutional people have to then go out there and buy Bitcoin, as long as they are seeing an overwhelming influx of buy volume. So that's what we're looking for. Obviously, I don't put any faith in predictions like this. I'm not putting any weight on it. These are the last few things that popped up this week, and I figured you guys should know that there is a lot of people looking for much higher prices on Bitcoin, and I am too. I have not seen any reason to adjust my standing or my position on Bitcoin right now. Now let's go discuss the S&P 500. So the S&P 500, you can see that we are expecting a $97 expected move for next week. since we closed at 58.70 spot 63. It's going to put the high end of that expected move at 5,967, and that will put the low edge of the expected move in at 5,773. Now, with that being said, we did gap down pre-market yesterday, and we did break open at and then close well below the expected range for last week. Last week's expected move was a little bit muted, coming off of a pretty big move over here when we had the election, and you could see that the week prior, not only did we breach the top edge of that expected move, but we traded almost double. It was a 150 point expected move this week. That week we traded up 300 points. So it's only normal that you see a pullback. Am I looking for price to get all the way down to 57.83 for a gap fill? You do have an expected move down here. This is what the options premium with the VIX and all the other components that is used to calculate the exact size of the measured move for the week. That would be for the close on Friday or next Friday's expiration. The expected move puts you down here at gap fill. So it is 100% possible that you will get a gap fill next week. However, I am looking to sell puts. If we do start to move lower at the very beginning of next week, I will be looking to take long positions because as I've stated, I have not really seen anything that leads me to think that this move higher is a fadeable event. Not yet. All right, so with that being said, let's go look at one other thing real fast, and then we'll wrap this up. So we can look at the XLK, which is the tech sector, versus the energy sector. You can see that you did get a little bit of a move lower. Now, is this starting to look crazy? No, not yet. I mean, you're getting down to the area where people will more than likely start to be a buyer on the XLK. You can go look at the XLK all by itself. You don't have to actually pair it with energy if you don't want. But you're getting down on the XLK around the 50 exponential moving average. This is on a daily time frame. If you go out to a weekly time frame, you can see that where you closed last week, you still have not tested it. You could call the week prior a 21 test almost, but still not quite. You're still well above the 50. You are under 60, so that does bring a little bit of curiosity in there, but we're just really starting to get started here with this, this bullish move back on the tech sector. So if the tech sector does catch up, this thing's going to fly back to the upside, and you're going to see the S&Ps and the NASDAQ benefit from that. All right, so back over to this. Let's go look at growth versus value. So you can see the SCHG, that is a growth ETF, versus the Vanguard value ETF. And you can clearly see that on a weekly basis here, that growth is in fact leading value. You would typically see this reversed when there is a period of risk out there, or when investors are starting to get a little bit worried. They will start to position themselves out of the more riskier growth sector into the value sector, as we saw right here back in January of 2022 when we seen inflation skyrocket. And then the most recent period of risk that we saw was in July and going into August, when we seen the unwind of the Japanese yen carry trade. That did bring forth a little bit of risk, and people started to position themselves out of the growth sector back into value. But you can see clearly, since that event has happened, people have started to slowly rotate that money right back from value into growth, which suggests we're going to be in a period of growth moving forward here. And until we start to see some real changes on this ratio, I am not concerned to the least bit as far as looking for the markets to crash or, have an '08 style bear market. There just isn't really anything on the table to discuss as far as what could potentially propel these markets lower. I mean, anything could happen. World War III could break out, stuff like that. I'm talking about normal things, though. The one concern right now is the absolute ungodly strength that the dollar is doing. Like, the strength of the dollar is insane. But we caught that trade. We literally sold very top right there at daily res at that one spot, 11769. That's where we got short. We were looking at the cyclical analysis on the dollar, saying that the dollar could be putting in a late cycle low. So right at the beginning of Q4, we simply got short the Euro USD if we were going to see that happen. And obviously that trade has turned into a phenomenal trade. So kudos to anybody that caught that. If anybody caught that, I had been talking about it, weeks prior to the move taking place. So I did get stopped out of this trade twice before actually nailing it. It's very hard to time those things, but we were looking for it and it did play out. And I'm pretty good at nailing massive and major turns in the marketplace. Right now, I'm not seeing anything that suggests that we're going to see any major downside. However, as long as the VIX is cheap, and when I say cheap, I mean under 15. You did get under 15 briefly, as the low here on the VIX was 13.59. Whenever the VIX gets under $15, you can put on a hedge trade for literally cheap. You can go out there and you can buy a trade for like $1 that has a maximum profit potential of $700-800 on it when the VIX is cheap. So whenever the VIX gets low, that's when you need to put on your hedges, when you can put them on for cheap. That way it's easier for you to mathematically calculate how much am I willing to lose on this trade. Is it going to be more than 1 or 2% on the total portfolio's equity? Or what's this going to do if it does, in fact, explode to the upside? You're going to capitalize on that. There are cheap trades that you can put on the VIX when the VIX is cheap, to where you can hedge your portfolio's long risk. You can hedge that off to complete if you want, or just throw a small portion of your portfolio into that to start to build a position. And I can see hedges being built. And another one last thing, and I'll end it with this. Back before, when the election happened, we were seeing a whole lot of people not wanting to put risk on further out than 12 days. So even though we were seeing a lot of options trading taking place inside the VIX, we got that again Friday. There was 1.5 million contracts traded on the VIX on Friday alone. So I went out there and I looked to see where those trades were taking place. They were not taking place 2 weeks out. They were going out 30 days. Look at the open interest out here, 30 days out. This is what we want to see on both the calls and the puts, as that shows us that there is a lot of interest on buying, longer dated stuff, which is good news for the near term. What we could basically glean from this, or what does this tell us? I mean, what it tells me, as if you go out 2 weeks, you don't see very much open interest out here, do you? Not much, not anything compared to what we're seeing 30 days out. What that simply says is that people are pushing that risk off into duration. So more and more people are starting to rotate from not being able to see past 2 weeks to going 30 days out, which is pretty good news for the future. So if nobody's really concerned for the next 30 days, well, then why should you be? With that, I'll end it. Thank you guys so much for your time. If you're new here, make sure you hit that subscribe button, hit the bell notification, all that jazz. Make sure you smash the like button on the video. Thank you so much for your time in advance. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.